Hi there, welcome to Kneppy Invest. In this June Quarter Appendix 4C video, I am going to look at Tesserent. I had hoped they would have released their full-year results by now. I'm doing this video around about 2 p.m. on August the 27th. A lot of other companies that I'll be featuring over the next few weeks. I've only got 13 standalone videos to do and some group videos, and quite a few of those standalone videos, those companies have released their full-year results. So I'll talk about that. Unfortunately, Tesserent quite haven't released their report yet. Last year, they released their full-year report on the 31st of August at 4:10 p.m. You can't get any later, or actually you can get later than that. You can actually release it on the 1st of September before market opens. I would prefer companies release their financial reports as early as possible so we have time to digest them, because this time of year, many companies are releasing their financial reports and some of them get lost. In fact, I do sometimes miss some announcements that I've released because there are so many being released. And I do think there is an advantage if you do release any financial report earlier than the majority of companies. But again, it's all up to management and what they decide to do. Anyway, so Tesserent is a company I've been following since they listed on the ASX. And when they first listed, for about 2 or 3 years, this company was going nowhere. In fact, share price was dropping. And I do think the management decided to have a bit of a shift in what they were doing. And they went on a binge of acquiring companies. And this roll-up model has been successful for Tesserent. You can just see that with the share price performance, cash receipts performance, and the fact that this company is operational cash flow positive. And when I did see their June quarter results, it did excite me as a shareholder. So for full disclosure purposes, I've been in and out of Tesserent on occasion, and I have decided to buy into this company when they did do a profit upgrade a few months ago. And I do think there is a lot of potential for this company over the next few years, because they are a cybersecurity company, and that is a growth area. This is the largest cybersecurity company in Tesserent, and they are still acquiring companies. In fact, the other day they made another announcement of another acquisition. So before we have a look at the June Quarter Appendix 4C results, or the June Quarter results, let's just look at some facts in regards to Tesserent. The ticker code for Tesserent is TNT, and the market cap at $290 million has been explosive over the past few years, rising quite violently during that time period because of all these acquisitions the company has made. And that market cap is at a share price of 27 cents. It has been significantly higher. Maybe a year ago, we said the share price get up maybe towards 40 cents. I can't quite remember right now, but I'll have a look at the chart in a few slides. Receipts of customers for the financial year, $91 million. And this company will be growing their receipts and their revenue over the next few years. We're going to see that increase quite a bit during that time. And operating cash flow positive for the financial year, $3.7 million. And when we have a look at the June quarter results, you can see a lot of that operational cash flow positiveness, if that is a word, has come later in the financial year. Price to sales ratio, pretty low at 3.2. If you want more information on what this company does, have a look at their website. It is a trove of information, just like many other companies' websites. Have a look at some of the presentations, or just go to their Appendix 4C that they released on the 29th of July. Before we have a look at Tesserent's June quarter results, just want to go back to the March quarter to see how the company was performing at that point in time, and then to see how the company has traveled in the following 3 months after they released this report, or after the end of the March quarter. We're already 2 months into the September quarter, and potentially when they release their full year results, they will give some indication on how the first 2 months of the financial year have gone for this company. But let's go back to the March quarter. Receipts to customers, $22 million. And they were operational cash flow positive by $1.8 million. Now, even though they were operational cash flow positive, they did spend money in investing and financing activities, and that meant their cash on hand did fall from $8 million to 2.7 or 7.7 million. And some of the money they did spend in financing and investing activities, acquisition, $546,000, deferred settlement liabilities, $1.2 million. And they do have to pay interest because they do have loans $35 million of loans, and interest amounted to $329,000. Now let's have a look at the June quarter to see how Tesserent has performed in the following 3 months. Let's have a look, and simply because I'm doing this video, we already know they were operational cash flow positive, but how high was the cash flow in operations? When I did have a look at these June quarter results from Tesserent, I was actually quite excited as a shareholder. I thought this was stellar results. Receipts to customers up about 11.5 million to 33.5 million. And even though they did spend $5 million more on product manufacturing and operating costs and $2.2 million more on staff costs, the increase in costs overall was significantly lower than the increase in receipts. And that meant all that went to the bottom line, and they were operating cash flow positive by $5.3 million. A lot of stuff happening in financing and investing activities. They grew cash on hand by $7.2 million. However, you have to take into account they did do an acquisition, $10.9 million acquisition. They made an investment, a $3 million investment, and that investment was very interesting because it's in regards to biometric security, and I do like that area of security because I really hate passwords, and that whole biometric security is trying to get rid of passwords, hopefully anyway. Borrowings 18.2, so they did increase in borrowings. Deferred settlement liabilities 1.9 million, and interest again 336,000. But overall, the cash on hand or cash in the business increased to $14.9 million. So a lot of money on hand to do further acquisitions, and we've already seen they've made another acquisition a few days ago from when I'm doing this video on the 27th of August. I always like to look at Section 7 of an Appendix 4C to see what the debt is for a company. Not only that, to see the particulars of those loans, what the interest rate is, because even though we're in an age where interest rates are really low, a lot of these companies, if they do want to borrow money, have to pay fairly high interest rates, and we see that with Tesserent. They do have 2 facilities with pure asset management, a $15 million one and a $20 million one, with interest rates of 8.9% per annum and 8.5% per annum. And they have $35 million of loans right now. Ideally, I prefer companies not to have too much debt, but at this point in time, I would say with the increasing operational cash flow this company will experience over the next few years, that sort of loans or those sort of loans are manageable, but they don't want to increase those loans too much over the next few years. I do think they want to keep those debt or the amount of debt at an acceptable level, particularly because interest rates on those 2 facilities are quite high, 9%. So good returns for pure asset management. I've already mentioned I started following Tesserent when they listed on the ASX. This was March 2016. And when we look at the receipts history for Tesserent over the next almost 4 years, receipts were doing nothing. Receipts were going sideways. And I think at this point in time, 4 years into their existence on the ASX, management went, well, this is not working. We have to do something else. And that's one of the most important things management have to decide upon when the business model they have in place is not working. What changes they can make to bring value to their shareholders. And they decided to go down the roll-up model to acquire companies, and it's really worked. And receipts have really blown up over the last 2 years, increasing from 3.4 million, or in fact 1.3 million in the June quarter 2019 to current receipts of 33.5 million. Significant increase from the March quarter, increasing from 22 million to 33.5 million. If we do calculate the growth rate in receipts since March 2016, we see 17% growth per quarter. But that's taking into account that first 4 years when receipts hardly grew at all. If we do away with those first 4 years and just look at the growth rate in receipts over the past 2 years, we see a 50% growth in receipts during that time period. That is significant growth in receipts. And one of the reasons why they are growing is because they are acquiring businesses. I would like to find out what the organic growth of their receipts are. That would be interesting because a roll-up model can't continue forever. We've seen that with other companies. GA Education is a perfect example. When they were doing the roll-up model, GA Education, share prices have zoomed, but ever since they stopped that roll-up model, we've seen the share price under pressure. So these sort of things or roll-up models can't continue forever. There's going to be some point in time when Tesserent has to grow organically. As we turn our attention to the weekly chart for Tesserent, going back to when they listed on the ASX back in early 2016, we did see the share price at 20 cents when they listed, and not a lot of interest in the market when it comes to this company. You can see that with the volume, very low volume, and the share price was drifting sideways. And the reason why the market wasn't interested in Tesserent, because the receipts were going sideways. There was no reason to get excited. There's no reason to buy into this company during that period. We did see a little bit of excitement starting to come into the market towards the latter period of 2019, particularly in January 2020, where we saw the share price increase on significant volume. That looks like it could have been a breakout in the company's share price. Unfortunately for Tesserent, that happened just before the COVID-19 financial panic, and that's where we saw the low of the share price in Tesserent. Got to 2.5 cents. And then we saw the share price rise from that 2.5 cents to a high of 44 cents by the start of 2021. Significant rises on a weekly basis throughout that period. A lot of tailwinds behind not only Tesserent, but a lot of other cybersecurity companies in Australia. It was during that period of time where a lot of government institutions and departments were getting hacked into. And a lot of times when you do see a rapid rise in share price like we did see in the second half of 2020, you'll see a bit of sell-off, and a lot of that interest will wane. And you can see that with the volume starting to decrease and the share price decreasing as well. The share price got as low as 18.5 cents in May or June, just before they released a profit upgrade. And again, that profit upgrade increased the interest in Tesserent again. That's why the share price started increasing around that point in time. One of the things that is holding back the Tesserent share price from increasing further is the amount of people, investors, who bought in between about August last year and February of this year at higher prices than where Tesserent is right now at about 27 cents. A lot of retail investors, when they buy into the company, any company, they expect the share price to almost immediately go up. And if the share price falls, they automatically think that company is a dog stock. This is quite common. In fact, so I'm surprised how common it is. When I've talked to some colleagues at work, not only one, but two colleagues have said exactly the same thing. They've just bought into a company, share price has fallen, and as soon as the share price gets back up to the share price I bought in, that's when I'm going to sell out. And that doesn't really make sense. I'd like to say or ask these colleagues, why did they buy into these companies in the first place? It all comes back to the psychology of investors. You want the share price to increase as soon as you buy in. And a lot of times it doesn't, unless you're buying as the share price starts to swing up from a long-term downtrend into an uptrend. And even then, there is possibility the share price will decrease just after you bought. You've got to remain patient. So I have bought into Tesserent, and I am going to be patient with this company because I do think this roll-up model will pay dividends literally and figuratively over the next 5 years. And then I'd like to see what they do when this roll-up model comes to a completion. If you have been enjoying this video series on companies that did achieve an operational cash flow positive June quarter, look out for videos on these 4 companies in the next week. I'm very excited to do videos on these companies for certain reasons. Airtasker and HI or High Pages, recent listings on the ASX. When HI Pages or High Pages released their full-year results on, I think it was the 26th of August, the share price rose 13%. So the market did like their results. I haven't looked at it yet. And before I do their Appendix 4C, I'll make sure I look at their full-year results or half-year results. Red River Resources also released their full-year results on the 26th of August. It did look quite positive. The share price has been under pressure because of the general malaise in commodity prices over the past month or two, and the share price did get as low as about 16 cents. And last time I looked today, the share price was up about 6%. And finally, Kneppy. I've been in and out of that company over the past 4 years. I've decided after they released their full-year results on the 26th of August to take a position. And fortunately, I did. There was some good time in there because the share price has increased about 15% the day after they released their full-year results. I really like to see that sort of performance. So the market has really digested their full-year results and has really loved it. And that's why share price has risen 15% the day after they release the results. I'm looking forward to doing that Appendix 4C video for that company because I am a shareholder now, a full-time shareholder. I'm going to maintain my holding for as long as possible with that company. And I'll talk about why I'm excited about the future of Kneppy when I do their video. That's all I have for this June Quarter Appendix 4C video for Tesserent. If you do have any questions about this company or any other company on the ASX, make sure you leave a comment, question, or just your thoughts in the comment section of this video. And more than likely, I'll get to answer anything you have to say within reason anyway. Last thing I should say is I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.